Well, in case you missed it earlier today, we were covering the national planting progress numbers that came out from USDA. Let's take a quick peek at what those numbers were. And for the corn planting, we're still running way ahead of schedule. We had 80% of the nation's corn crop put in the ground already as of Sunday, and that compares to 68% for the 5-year average. Soybeans, 61% done already. Phenomenal progress on the part of farmers putting the new crop in the ground this year. 61% done on soybeans. Their average is 37%. High kudos to everybody out there getting the crops in the ground this year. Cotton lagging a little behind, 38% done. Their average is 40%. And grain sorghum planting about 5 points behind schedule at 27%. On the national condition ratings, we have a couple of categories now to check in on. One is winter wheat, and that actually declined by 1 point, down to 48%, good to excellent. And the rice, that's the first report for the year. It came in at 74%, good to excellent. So a very good rice crop, off to a good start here this year so far. Let's look at our current prices. We'll go ahead and take a look at corn first with our quotes provided by Bar Chart. July corn up 11 3/4 at $6.64 1/4. Remember, we had an overnight sale of 1.36 million tons of corn to China, new crop again. And December now 9.5 higher at 5.46 3/4. Interesting soybean action today, where the July keeps getting picked on. It's down 4 cents at 15.83 1/2, but November is 4 3/4 higher at 14.01 3/4. It had been down below $14, but back up above it once again. In Chicago, you have your July wheat. Currently, if it'll switch over here, it's currently 6 and now 7 1/4 higher at 7.07 per bushel. The high overnight was 7.18 1/2. In Kansas City, we have been trading higher as well today, with July 5 1/4 higher at 6.57 1/2. And Minneapolis spring wheat has July currently trading 7.20, and that's 5 cents higher. Brian Hoops is with us right now. And of course, he hails from Springfield, Missouri. He's with Midwest Market Solutions. Brian, all kinds of choppiness in the ag trade, generally a higher bias, except for July soybeans. What do you read into the market and what it's trying to tell us here today?
Hey, good morning, Marlon. It's a really choppy market right now. You know, we've had the last couple of days have tried to rally in the morning and then faded as the day has gone on. And the trade is hoping to avoid that same type of repeat pattern where we kind of fade from these early highs. And July soybeans kind of given up some of their strength early. That's a disappointment to the trade. So close will be very closely watched by the trade today. If we could close fairly strong technically up near the highs of the day, I think that'll give us some more additional speculative type buying and short covering. And maybe we can conclude that yesterday's washout in prices was the third day down, and that was enough to trigger all this fun selling that we've seen. Maybe that's coming to an end. But so far, you know, market's kind of just in limbo in here. Really not enough weather issues to put a lot more premium into the marketplace. We've taken quite a bit of premium out already, and now the market may just want to consolidate until we can turn our calendar, forecast calendar into June and see how the conditions are going to be in the early part of June as we go closer to pollination.
When you look at the way the wheat market is acting, kind of going sideways here this week, what is the seasonality, the seasonal tendency here?
Yeah, I was surprised that the wheat conditions did not improve at all. Down here in Springfield, we have some wheat in this area, and things look really good. I thought they maybe would improve, and that's what the trade was expecting as well, a small improvement in ratings. We didn't get that, so we're seeing some short covering in the wheat market here at this time. We're much less rated than what we were a year ago from a standpoint of how this market normally reacts. If we usually get some rains in May, so seasonally it's a little bit of a weak time frame, but the crop's not responding to these rains, so we may actually start to see a little counter seasonal rally where we start to move higher.
Okay, we'll look at our livestock trade and some of the outside markets in just a moment. Come on back. We'll have more with Brian Hoops. Let's look at our livestock trade and some of the outside markets as well. I did want to point out, in case you're wondering what the Dow Jones Industrial Average is doing, let's take a quick peek over there. Sometimes the equity markets can have a bit of a relationship here with the meat markets. The June Dow Industrial Average Futures, they're down 71 points now at 34,185. Now, the U.S. dollar index has been weaker, and that has to be helping the wheat today, you would think. June is down 352 points at 89.790, so still under 90 cents. And the crude oil market for West Texas crude is now down 48 cents at 65.79 per barrel after getting as high as 67.01. So an about face there. Currently on live cattle, let's take a look at what the futures are doing. We have June now 80 cents higher at 116.15. August and October also 80 cents higher right now. On the other hand, you have the feeder cattle market going down by triple digits on the nearbys. We have the August down $1.40 at 151.35. Then you get to the lean hog trade, and lean hogs are over $1 higher. You have July up $1 at 109.95. August now up $1.15 at 106.47. Let's go back to Brian Hoops of Midwest Market Solutions. So the live cattle have a little bit of strength to them today. The feeder cattle market kind of fading away. But, you know, you and I were talking during the break. This, if you look at a chart on the May feeders, they have actually had a little bit of a good little run for about the last week and a half or 2 weeks. Maybe they need a breather for a little bit. What do you think?
Yeah, you know, and with the corn market trying to rebound today, it makes perfect sense. Feeder cattle would come under some selling pressure. Live cattle finding a little bit of strength, though. This cattle market is looking at the cash trade last week, seeing a steady to $1 higher trade, thinking we may see another dollar gains again this week, at least steady, if not $1 gains. Cutout values moving higher. The show list numbers are lower this week, just slightly, maybe 1,000 head or so smaller than a week ago. So it does give the trade confidence that we're going to see a little bit stronger cash markets. In fact, I've heard from some clients that packers are very aggressive about taking their cattle. Some cattle that they talked about on Friday, they're taking already to kill yesterday and today. That's pretty quick when those buy those cattle that they want them and get them animals slaughtered.
I know you're often very well connected on the cash cattle market. Last I heard, they may be asking 121 for some cattle out in the country this week. Have you seen an update on that today?
Yeah, that's what the last I heard as well, was some 121. I think that would buy quite a bit of cattle this week. There is, you know, some numbers that have been carried over the last couple of weeks, hoping for a little bit of a bounce. And so I do think if you see that 121 out there, that will buy a lot of cattle this week in the southern plains and somewhat in the northern areas as well.
All right, interesting. Just a little bit of trade yesterday at 119 to 120, so we'll see if they can get that or not this week. Thanks, Brian. Appreciate the help today. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Janet, back to you.